Have you ever wondered why jumping into the crypto world often feels like a thrilling but risky adventure, packed with huge potential yet full of hidden dangers? Today, we're going to unpack MiCA, Europe's pioneering framework that's bringing order to the chaotic side of digital assets and making them more secure for all of us. Stay with me as we walk through it step by step. First, a disclaimer. This video is purely for informational purposes and is not legal advice. If you're looking for tailored guidance, reach out to our team or another qualified professional. Hi there, I'm Robert, and I'm excited to have you here at the Knowledge Center, your go-to spot for breaking down complex legal topics. A quick intro about me. I earned my master's in law from the University of Ljubljana and founded Chiroptera Consulting, a legal firm based in Slovenia. We've got extensive experience in crypto law, international trade, tax issues, and AI-based SaaS compliance. So far, we've guided more than a dozen businesses through everything from MiCA compliance to avoiding GDPR traps. So let's talk about stablecoins under the MiCA regulation. In the volatile crypto space, stablecoins are like anchors. They're digital assets meant to keep a steady value, usually tied to real-world currencies like the euro or dollar. But in the European Union, a major new regulation is transforming how they work. That's the Markets in Crypto Asset Regulation, or MiCA for short. It's a comprehensive EU-wide set of rules for crypto assets, their issuers and service providers, focusing on transparency, protecting investors, and maintaining market fairness. MiCA came into full effect in December 2024, with some key parts kicking in as early as June that year. Why should you care? Stablecoins are behind a lot of everyday crypto activities, from fast payments to trades in decentralized finance, or DeFi. Without proper oversight, things can go wrong fast. Think back to the Terra USD collapse in 2022, which wiped out billions overnight when it lost its peg. MiCA is designed to stop those kinds of disasters by categorizing stablecoins in two types: asset reference tokens, or ARTs, which pull value from a mix of assets, and e-money tokens, or EMTs, which are directly linked to a single currency. This framework requires issuers to fully back their tokens, get regular audits, and operate under strict supervision. For everyday users, that translates to safer choices, less chance of scams, and clearer protection. But MiCA isn't just about restrictions. It's sparking real innovation too. As non-compliant tokens like USDT get punished out through delistings, we're seeing a rise in compliant euro-based stablecoins. This could help stabilize Europe's digital economy and support bigger goals like financial inclusion. In this video, we'll cover MiCA's tough requirements for stablecoin issuers, the authorization and oversight processes, some real-world examples of market shakeups, the growth of compliant alternatives, and what it all means for you moving forward. By the end, you'll have a solid understanding of how MiCA is reshaping EU crypto regulations here in 2025. Let's start with MiCA's strict requirements for stablecoin issuers. Stablecoins are all about reliability, right? So, how does the EU make sure they actually deliver on that? Under MiCA, issuers have to meet rigorous standards to earn trust. Imagine stablecoins as digital promises. They need to be supported by real tangible assets to hold up. MiCA breaks them down into two categories I mentioned: ARTs, which stabilize value by referencing a basket of things like currencies or commodities, and EMTs, which are pegged to just one fiat currency, functioning much like electronic money. One of the core rules is maintaining reserves at a 1-to-1 ratio. That means the backing assets have to match or exceed the value of the tokens out there, so holders can redeem them at face value whenever they want. As outlined in Article 36 of the MiCA regulation, issuers must keep a reserve of assets separate from their own funds. This aims to prevent abuses like using reserves for other purposes. Picture it as your stablecoin being a digital IOU, fully covered by actual cash or equivalents in a secure vault. For arts, there are independent audits every 6 months, and issuers have to publish summaries online showing the reserve makeup and how they're complying. EMTs have similar obligations, but with reserves strictly tied to the pegged currency. The Terra USD crash in 2022, which erased about $40 billion, showed just how badly things can spiral without safeguards. MiCA aims to avoid repeats by demanding transparency and prudence. For the average person, it simply means more safety. You don't have to worry if your stablecoin is backed by nothing substantial. Issuers must clearly disclose risks and run their business professionally. If reserves start slipping, they have to take quick corrective steps. And what if they don't comply? MiCA packs a punch, with fines up to 12.5% of annual turnover. This level of rigor in stablecoin compliance is all about protecting users and building a more mature market. As EU crypto regulations continue to evolve in 2025, we can expect even closer checks on those reserves. A quick tip: always check the issuer's website for their latest audit reports before you decide to hold any stablecoins. And a common mistake to avoid: don't assume all stablecoins are the same. Only those compliant with MiCA offer that extra layer of EU safeguards. Next, let's look at authorization, oversight, and protection for users. How do issuers prove they're reliable enough to operate in the EU? MiCA requires them to get formal authorization before they can even start. Companies submit applications to a national authority such as France's AMF or Germany's BaFin. For EMTs, issuers need to already be licensed as credit institutions or e-money institutions under existing EU laws. A crucial part of this is the white paper. It's essentially a detailed document outlining the issuer's operations, risks, governance, and tech, like a thoroughly reviewed business plan or prospectus, if you will. According to Article 19 of MiCA, it has to cover the issuer, the token details, any public offerings or tradings, rights and obligations, the underlying technology, potential risks, reserve assets, and even environmental impacts from the consensus mechanisms. The white paper must be fair, clear, and non-misleading, with no hidden details or hype about future value. It includes bold warnings that the token could lose all its worth, might not be easy to sell or transfer, and isn't covered by standard investor or deposit protections. There's also a management statement confirming everything's in line, a simple summary for quick reading. And it has to be available in accessible languages and formats. The European Securities and Markets Authority, ESMA, and European Banking Authority, EBA, set the standards for this. No approval on the white paper? Then no issuing the token. But oversight goes beyond that initial green light. Issuers have to report regularly to bodies like the EBA to stay compliant. For significant stablecoins, those with reserves over 5 billion euros or with more than 10 million users, the EBA takes direct control, as detailed in Article 43, to prevent broader economic risks. For users, MiCA brings tangible benefits. You can redeem ARTs at par value during normal times without any fees. during recovery times with reasonable and proportionate fees. If the white paper has misleading info that leads to losses, the issuer can be held liable. MiCA also takes care of the complaint process. Article 31 ensures it's handled fairly and at no cost to you. This whole system is built to foster trust without getting bogged down in overly complex terms. MiCA's user protections cut down on nasty surprises like unexpected fees or blocked redemptions. In the broader EU crypto framework, it's empowering, giving users rights similar to those in traditional banking. Is it perfect? No, of course not. But it's a huge step up from the Wild West days. Insights from the EBA show how this supervision for major players helps protect the overall economy. As white paper standards get stricter, things should run even smoother. Here's a practical step. Check official EU registries to confirm an issuer's authorization. And the key benefit? This added security lowers your risk of fraud, especially in DeFi. In 2025, these elements of EU crypto regulations are making the market stronger, turning stablecoins into dependable tools for daily use. Now, what about real-world examples of delistings and market disruptions? Take a heavyweight like Tether's USDT. When it ran afoul of MiCA, things got messy, but in a managed way. Starting late 2024, non-compliant stablecoins were pulled from EU exchanges en masse. USDT, the biggest dollar-pegged token globally, didn't have an EU-authorized issuer, so it violated MiCA's compliance rules. Binance stopped spot trading for EEA users by March 31st, 2025, limiting it just to holding and withdrawals. Coinbase did the same in December 2024, blaming MiCA requirements. Crypto.com followed suit by January 31st, 2025. Exchanges faced hefty fines if they kept offering unauthorized tokens, as per MiCA's penalties. Users definitely noticed. Trading pairs lost liquidity, pushing people to switch assets quickly. But this demonstrates MiCA's real power, putting safety first, even if it means short-term inconvenience. Why USDT specifically? It fell short on reserve audits and EU-based entity rules. Article 16 requires authorization for any public offering, and offshore setups like Tether's didn't cut it. Tokens like FDUSD and TUSD met similar ends on platforms like Binance. These shakeups created a fairer environment, giving compliant options room to grow and improving overall market integrity. In EU crypto regulations for 2025, these delistings mark a move toward regulated reliability, cutting back on uncontrolled expansion risks. Did it stifle innovation? For a bit, sure, but it also eliminates unreliable players. Users shifted to euro-denominated stablecoins, which helped avoid currency conversion headaches. So, what is the lesson from this? Keep an eye on exchange updates for compliance news. And the upside of this? These disruptions sped up the switch to safer choices. As USDT steps back in Europe, what's stepping up? Compliant euro-denominated stablecoins are booming under MiCA. They are tailored to the local currency, which means fewer exchange rate issues for EU folks. Circle's EuroC is a frontrunner, fully backed by euro reserves, redeemable one-to-one and fully MiCA approved. Its reserves are held in regulated EEA banks with monthly transparency reports. Then there's Societe Generale's EuroCV, issued through their Forge platform, ticking all the boxes: segregated reserves, regular audits, and investments in low-risk assets. Others are joining in, like Banking Circle's EuroI, through partnerships, Societe Generale is teaming up with Bitpanda for easy access. Exchanges such as Kraken and Gate.io are featuring them front and center. This growth is great for users. Euro-backed tokens fit perfectly into DeFi and payments across the single market, syncing with European Central Bank policies. MiCA's mandates for secure, low-risk assets ensure they're stable. Sure, there are hurdles, like starting with less liquidity than USDT, but the advantages are clear: lower costs and stronger security in the long run. In summary, compliant tokens provide top-tier safety. A bonus tip for you: stick to compliant platforms to steer clear of interruptions. Wrapping up, MiCA's framework is revolutionizing stablecoins in the EU, eliminating major risks and promoting trustworthy options. For users, it delivers stronger safeguards such as assured redemptions and open audits, which build real confidence in digital assets. Early challenges caused some market turbulence, but cleared the path for compliant euro stablecoins. Looking ahead, this should drive innovation, like cheaper transactions, smoother DeFi, and better alignment with European values. Nevertheless, challenges haven't disappeared, but MiCA compliance is fortifying the entire ecosystem. In essence, MiCA is converting risks into real opportunities, setting EU crypto regulations in 2025 as a global standard for stability. If you found this video useful, please consider giving it a like, sharing it with your network, and subscribing for more similar content. If you are eager for more legal insights, check out our Knowledge Center via the link in the description. Thank you so much for watching.